Welcome to Chain Reactions, a weekly live stream and podcast from Myosin.xyz, the leading global marketing network. I'm your host Blake, joined by my co-host Polina, and join us as each week we explore the chain reactions happening across crypto by interviewing the leaders behind the industry's most impactful companies. We go live on X every Wednesday at 11 a.m. Eastern and release a podcast the following week. Let's get started.
Started. All right, perfect. All right, well, welcome everyone. I'm Blake, and this is Polina, your co-host on Chain Reactions, a weekly live stream podcast where we talk to leaders, co-founders, heads of marketing, all around great people from around the crypto sphere. And really excited, I have Sebastian on today from Reserve One. Reserve One, they're one of the leading digital asset treasuries that I believe you guys are coming out and through a SPAC coming out in Q1. But really excited to dive into everything you guys are doing and how it all works. So kick things off. How you doing, Sebastian? How you feeling?
GM, as they say. I'm feeling pretty good. Actually, we're just past noon, but I still feel like I'm waking up. Maybe, this. I think this market has dinged up a few of us, of course, but doing okay. Happy to be here. Happy to be talking to both of you.
Awesome. Well, oh, wait, what happened? Polina, you good? Polina, we can't hear you. Something happened here with your mic, but we're just going to keep moving. But lovely to meet Sebastian. Lovely to have you here. As usual, I think every guest we have on, we always love to kind of get into the human story. So love to learn a bit more about you so the audience understands, what's your story in finance, and then how'd you get into crypto and how'd you end up at Reserve One?
Yeah. The short story is I worked at BlackRock, CSB. I'm an Olympic medalist. And I got into Bitcoin because my friend was buying $600 million worth of Bitcoin on Thanksgiving Day in November 2020. Pulling back
That's
up.
conviction.
Yeah. It was literally a dog walk that got me into Bitcoin because my neighbor was in the process of doing what at the time was the first institutional allocation to crypto back in November 2020, and we were walking our dogs, and he says, "Oh, I got to take this call." And I said, "Like, really? On Thanksgiving?" Like we just like, it was like in between. We both had our our dinners, and then this was like the walk before the dessert. And I'm like, "Where are you going?" He's like, "I got to take this call." And he comes back, he's like, "Yeah, I just bought $50 million. I'm like, "Of what? Like what is, because what is trading on Thanksgiving? Like all markets are closed." And he said, "Bitcoin." And I thought to myself, okay, what is going on here?
Were you aware at that point? I'm assuming you at least knew about it, but you were like, why is he putting all this into Bitcoin?
I was like every other overconfident financial services guy that said, "Oh yeah, I know what that is," and had no idea.
Right.
And then I didn't even know Bitcoin was a 24/7 market asset, right? Look, TradFi is full of a bunch of people that are used to copying behaviors and putting up a brave face and really don't know what they're talking about. And we just basically copy behaviors, and it seems to work out okay. And I realized in that moment that I was missing something big, right? And I said, wait a second, here's a liquid market. He's trading 50 million bucks of Bitcoin. I knew of Bitcoin, but I didn't understand it at all. Right.
Yep.
And, like everybody else, I thought, okay, it's for criminals and for money laundering and all that sort of stuff. Like that's what,
you and Jamie Dimon.
No comment. But although later on today, we can talk about some of the things that have been going on on the DAT side and questions around haircuts and collateral to dispel. I mean, look, things are going on, right? They're not necessarily all positive. But they're not what a lot of the conspiracy theorists on Twitter think that they are. And so happy to discuss those later. So, but back to your question. So I kind of got into Bitcoin in that moment. I said, wait a second, this is really interesting. And then my neighbor at the time, Eric Peters, I said, listen, I need to understand what you're doing. And he sent me an email packet that effectively kicked me down the rabbit hole. Right. And it had a whole bunch of really obvious things like the Bitcoin white paper. It had John Pfeffer's note back from, I want to say it's 2017, maybe earlier. Had a bunch of stuff that's all been forwarded around to people that after they got it and actually read it said, wait a second, this is new, this is different. And I need to figure this out. Right. So that's what got me into it. My history in financial markets is mostly institutional securities, principally institutional equities. So I did my first 12 years of my career at Credit Suisse First Boston, which eventually was Credit Suisse, and which eventually, unfortunately, got taken under by UBS. As we like to say, the Clipper ship is no more, because the Clipper ship, which was First Boston, is now part of UBS. But that was where I learned public markets, equities, hedge funds, mutual funds, large institutional investors, how they operate, what they care about, like how markets work. I was a lot of what I did was helping to help sell IPOs and secondaries. So you're taking companies public, you're talking to the analysts, you're talking to the buy side, you're making the case for the company for which you're raising capital, you're answering their questions, you're understanding how people value things, right? So really the nuts and bolts, the guts of our US capital markets are the equity markets in the US. And so that's where I got started, which was an amazing education. And then I went to this little firm called BlackRock. You may have heard of it.
Maybe.
Yeah.
Here and there.
Yes.
And even though I had been in, let's say, active hedge fund business, right? Like my clients had been all hedge funds. I went to iShares, which is really a beta business. So to explain that for a sec, indices are meant to track a market, right? The beta, as they call it. And you're not trying to outperform the market. You're literally just trying to own it, right? With a list of stocks. And so I had never really even understood what indexing and beta was, and why iShares was raising so much freaking money. But the first job I had at BlackRock was actually in iShares, and it was an amazing experience. And then after that, the hedge fund part of the business knew of me and said, wait, no, we need you on our side. So I got plucked from the hedge fund, from the beta side, from index, right, from iShares over to the hedge fund business. And I spent most of my time actually building portfolios for institutions in the quantitative equity business known as BlackRock it was called Scientific Active Equities. We changed our name to Systematic Active Equities. Like these names are very big deal in a very small world, right? 95% of the world's capital, give or take, is run by 300 institutions, right? So when people say institutions, I say, well, what do you mean? Like, do you mean like a hedge fund? No, I mean the institutional capital owners, the pension funds that have 100 billion or 200 billion or $1 trillion of assets under management, right? Those were the clients that we were targeting at BlackRock in my business. So that was the kind of for me, the educational, like big time educational part of my career, where I learned a ton on the public side, on the equity side, the CSB, and then I was at BlackRock in the quantitative equity business, working for the largest institutions in the world. And I was paid, but honestly, it was like going to school every day. It was amazing. I was the dumbest person in the room by a long shot, and I was surrounded and supported by brilliant people, and it was really cool.
That's awesome. And how did you come to Reserve One then?
Well, so the next step in my path was what I mentioned at the beginning, the Thanksgiving Day walk, right? In November 2020, was still at BlackRock. Everything was great, but my friend was doing this thing. He's buying $600 million worth of, it was actually $650 million worth of Bitcoin and Ethereum. It was a 90-10 split. And I said, okay, that's super interesting. Well, my friend's business ended up having a lot of growth potential. And he said, listen, I need some help. Meaning me, you know how institutions work. Let's grow this thing called One River. So I ended up going over there. We created One River Digital, which was the digital asset manager next to One River, grew the business overall. And then we sold One River Digital 2 years later to Coinbase. And so I became a key person in that transaction. And then Coinbase Asset Management was created via the transaction that bought One River Digital. So that's how I ended up at Coinbase, where I was for 2.5 years, which was a fantastic experience.
You're just collecting names left and right.
So BlackRock and Coinbase, you've heard of these companies, right? I've been very lucky, and One River, I've been very lucky to work at a bunch of really interesting but different companies, right? Like BlackRock's amazing, Coinbase is amazing, but they're completely different, right? And to have that experience, Polina, that's what led me to Reserve One, right? Because the digital asset treasury trend and what these things could and might become, basically this particular group that was thinking about building something said, hey, we want somebody that understands crypto, but really understands institutional investing. And, I was lucky to have been at both of these, really, really important firms. Now, BlackRock itself has become, more of a real crypto investor more recently, and they're still on their path there. But yeah, that's that my background and what Reserve One was meant to be, or is kind of how I ended up at Reserve One. So, and I ended up
And it,
working. Go ahead. Sorry.
no. I was just going to say, like, I can't imagine there are that many people who have that wealth of, I think, experience and knowledge across all those, both sides, right?
From
Because
being
it's,
an Olympic champion
yeah.
to like Black, I think this is
Well,
a unicorn.
we are currently in the SEC registration process, and I don't want to make any material misstatements. I am an Olympian and I'm an Olympic medalist, but I'm not an Olympic champion.
Sorry.
I have an Olympic silver medal from the 2000 games rowing for the United States. I do have a world championship medal from 1997. So I am a world champion, but I'm only an Olympic silver medalist. Sorry.
I think if
Only.
you make it
What
to
a
the
shame.
podium, you're already a champion. Like,
No, it's true. It is. Just as an aside, that experience was incredible. But your instinct, Polina, is totally right, because the difference between first and fourth in my race was 1.4 seconds over 6.5 minutes. So it was nothing. So I could have been gold, or I could have gotten the wood medal. I could have gotten nothing, right? So I think your instinct is correct. Just to have been there was a gift, and then to actually end up on the medal stand, you can't ask for anything more.
I love it.
yeah.
Well, I think now it's time. We went into the past, we came all the way to the present. We'll love to now also talk about Reserve One, which is why we're all here, right? So can you, tell the folks, what is Reserve One? Why is it, what's the problem you guys are solving? What's so unique? And then, as we all know, right, digital asset treasuries were a really hot thing, I think, over the past 3 to 6 months. I do believe they're still going to be a thing, but it is a fairly competitive market. So how are you guys thinking about it? What is Reserve One going to do differently? Um, Pretty straightforward. Yeah,
But
Sure.
maybe also like digital asset treasury. Let's start there, because also for non like
that's true.
crypto, right, people,
Yeah.
just
Yeah.
as simple as possible.
It's a great idea. Look, I think what's happening here in crypto is we all recognize there's the arrival of a new technology, a new way of doing things, right? And there's a lot of excitement around that. So that's created a lot of capital raising around the space. But that's kind of similar to the IPO and tech bubble that we saw in 1999 in some ways, right? To say we all know something big is happening here. And we know that it's going to really fundamentally change how we save, how we spend, and how we invest, right? I think we all believe that is what's likely to happen, right? And so a bunch of companies have been set up to try to capitalize on that and also deliver some of those benefits to investors, right? And also at a high level, like, we all recognize that digital assets are not stocks, right? And some of the structures that we have in the public equity market don't necessarily fit the asset class, right? So like, I'll give you an example. So Ethereum, right? Amazing network, amazing asset, right? But does it fit into an ETF as commonly understood? I would argue potentially not. And the reason is very obvious. Ethereum has a staking queue, right? You want to get in, you want to get out. Sometimes it can take you a while to get out. More recently, for those that are in the space, we know there was a big move to unstake, and that led a staking queue, or a line to get out, that was 40 days long, right? Well, the problem is, if you have Ethereum in an ETF, and the ETF needs to do both creations but then redemptions, right? Well, you can't redeem from the chain when you're stuck in the staking, when you've been staking and waiting for your asset to be unstaked, right? So I think part of the theme around the digital asset treasuries is clearly the innovations that are happening and that people want to be invested. Another part of it is to recognize that some of these assets that people want to be invested in don't necessarily fit in the existing structures. So what is a digital asset treasury? At its high level, it's a corporation that has maximum potential flexibility in comparison to existing investment funds. But it is a company, it's not an investment fund. And as a company, it can do more things, right? You can take your Ethereum, you could stake it, you can restake it, you can do DeFi, you can do a lot of different things that you can't do in an investment fund. So that's the nature of being a company versus, say, being, a tightly restricted, but, and that's a good thing too, but tightly restricted investment vehicles. I think one of the big things around digital asset treasury is to say, well, they might, for investors that want to be long these assets for a very long period of time and want those assets to work in their ecosystems respectively, it may be the case that a digital asset treasury might be a better way to implement your investment intention than an investment fund because of how investment funds are built today. Let me pause there. I said a lot.
I mean, it makes a lot of sense, right? I think that's a really important, like, just to double click on that for people to listen to, right? Is there's a big difference between the digital asset treasury and just an investment fund, because as you said, right, like, and ETH is such a specifically, if we just double down on that, right, is I remember even when it comes out, and I try and explain crypto to friends and family members, and it's always so confusing because you're like, well, there's this gas token, but then there's this other thing, and I've talked to friends in finance, right, and they're like, so how do I run a DCF off this, a discounted cash flow? And you're like, well, you can kind of do it this way, and a lot of finance people try, and it's just a unique beast, right? There's a lot of different ways you can generate yield. There's a lot of different ways you participate. Yeah, so it's a unique beast, and I think that's where digital asset treasuries make a lot of sense.
Can I share a screen here?
All right, yeah, I think you can.
Let's see. I'm going to share. Do I press screen here?
There should be a share button, right?
I don't want to do that. Hold on.
Okay.
I want to share screen, but I actually want to share a window.
Yes.
And I want to choose this one. Share this window. Okay. So we didn't plan this, but this is. I just want to make the visual because I think when people listen to a podcast, they're like, "Wait, what are you talking about?" Right?
And we publish this as video too, so this is all good to go.
But even if you see on the video, you say, okay, ETH. Okay, let's back up. So Ethereum data asset is Ether. We can refer to it as ETH, right? And this is the validator queue, right? So this is the issue that we were just discussing as an example, right? Every blockchain is different, right? Solana doesn't necessarily have these issues, but this is one of the largest assets in the space, right? And if you are to go and seek yield, one way that some investors will want to seek yield is to stake their ETH to participate in the security algorithm on the Ethereum network. And the issue that we're flagging with respect to like a traditional investment fund, let's say like an ETF, is exactly this. So you see the exit queue here has gone up pretty substantially in terms of total ETH that wants to leave. And in terms of days, this is what it looks like. So that says 28 days right now. Now, why did this happen? There was one particular vendor that had a security concern. They're basically unstaking to then restake. It's not as if they're saying they don't believe in staking, none of that. But it's one vendor that decided that they needed to completely unstake and restake everything that they're doing. And that has led to this. Now, that doesn't call into question ETH or what it's doing and the value of it. But if you're trying to run an investment vehicle and all of a sudden you need to answer daily liquidity and you're running Ethereum staking, this is a consideration. Now, there are ways to deal with this, but it's not trivial. And I think that's why some people have said, well, wait a second, it may be the case that we need a more flexible vehicle to get the most out of digital assets. So I think that's where a lot of the digital asset treasuries have come from. Now, with respect to your question, what are we built to do? So we're in the process, obviously, of building our business. We have not yet launched, but the intention here is to be the first scaled, diversified digital asset treasury. Almost every other digital asset treasury is dedicated to one asset, Bitcoin or
let's
Ethereum.
Talk about that, because I think right
Solana.
Now within DATs or DATs, right? Like, I think the one that everyone knows almost, especially in crypto, and I think outside of crypto, is like Tom Lee, right? He's a giant ETH bull. We all love ETH, but I'm a strong believer in a multi-chain world. I also like Sol. I like others. So curious how you guys think about being that diversified, I guess, DAT, and like, what's your strategy as far as you can disclose?
Sure.
How you guys think about it? Yeah, we'd love to hear more.
Well, look, the traditional investment world, when they make investments, they generally use a diversified approach, right? Why? Because it's really hard to choose winners and losers. This is not called the S&P 1, it's called the S&P 500, right? It's not the NASDAQ 1, it's the NASDAQ 100, right? So if you look at the mountains of capital that exists in our world, the number one thing that the world bets on is diversification, okay? So And why? Because it is very, very hard to know for sure that one thing is going to beat everything else, right? And that's why index strategies are so successful. So we start with that premise that having a diversified portfolio helps you because you don't know who's going to win. On top of that, you also know that a diversified portfolio is more likely to be less volatile because each one of the assets, even though they're volatile themselves, they don't act in lockstep, right? So diversification helps you maybe own the winner even though you didn't know who it was going to be. But then also the ride is expected to be a little bit smoother whenever you're in a diversified portfolio because the assets are not they're not one-to-one correlated with each other. That's why in the traditional world we have portfolios because there's this statement. There's no such thing as a free lunch except for one thing: diversification. That there is a free lunch there in terms of trying to expose you to what the market return is, and also you get this benefit of diversification in terms of volatility, where the overall volatility of your portfolio is lower if you are exposed to many assets. Right now, we're in many ways we're traditional institutional investors at heart, right? So we look at this space and like you say, well, Bitcoin is really interesting. Ethereum is very interesting. Solana is very interesting. And there's a bunch of other things that are very interesting. And it would be hard for us to think that we would make a bet today forever that only one thing is worth investing in, right? And building a business on. So diversification is something we believe in very deeply, and that's core to our strategy. And upon launch, we're expected to have a diversified portfolio, which is initially inspired actually by the U.S. government's action. So, the U.S. government has talked about setting up both a strategic Bitcoin reserve and a digital asset stockpile, right? They propose these things. They don't exist yet, but they propose them. And the idea there is to codify in law that these assets are important and should be held, while the government is at the same time writing legislation to support the use of these assets, right? So part of our strategy when we launch is to seek to have exposure that is similar to what the government has already disclosed, which is Bitcoin, Ethereum, Solana, Ripple, and Cardano. Those 5 to start with. Now, we expect over time, obviously, what the government will do and say will change, always does. But that was the initial inspiration. And what's the net effect of this? It's to end up owning the upgrade, right? Because if you think that we need to save better, then you're probably going to buy Bitcoin, right? If you want to spend in a better way, then you want stablecoins, right? And if you want to buy assets and securities on chain, well, you're probably going to use tokenization. Both of those last 2 things are probably going to benefit things like Cardano, Solana, and Ethereum, right? So our overall investment stance is that we want to be diversified. We also want to deploy those assets to seek yield over time, and the net effect of it, we think, is that people that were going to invest in our company seek to own this upgrade of our financial system.
You mentioned that you have not yet launched.
Mhm.
Right? So, but it sounds, like you guys have a lot of things going on already. So what does that launch look like? And when can we expect it?
Sure. So we, like some other entities, raised capital through what's called a PIPE and a convert not that long ago in July. And we, like others, have submitted what's called an S4 or a business description to the SEC. And then the SEC, of course, promptly closed, which has delayed the launch of many different vehicles, right? And so we and others are just working on that process, right? So the anticipated timing that we had earlier is now a little bit later. The expectation is that we launch in Q1. Not much more I can say there, but we and others are all in the same boat that now the SEC's open again and they're working, so everything seems like it's going back on track, which is great. But what was supposed to be a Q4 launch will probably be a Q1 launch at this point.
Roger. And I think, we all like to know you're the CIO of Reserve One. What does it entail? Like, what do you do day to day?
A lot. I'll start there. But
Yeah.
no, look, my job is to steward this portfolio more than anything else, right? So to invest our capital when we have it into these blockchain assets, and then to deploy those assets once we own them, right, to seek yield. And on top of that, also to build relationships and deal flow on the private side, so we can over time make high conviction venture and private equity investments that could be equity, could be tokens, right? That are aligned with this theme that our portfolio now has, that that we're seeking to own this upgrade, right? So things that are enabling everything to move on chain for a financial system. That's the type of stuff that I'm looking at on a daily basis. So right now, my current fascination is with things that are trying to leverage Taproot for Bitcoin, right? Because Bitcoin is the most pristine collateral we have, right? But the way that people have tried to expose that collateral to economic risk has been, let's say, suboptimal, right? So do you want to have your Bitcoin at a custodian wrapped? And do you is WBTC the optimal way for you to get to use your Bitcoin in financial transactions, to put it at economic risk? Probably not, right? I think a lot of people would say, well, Root was built for a reason. Can we have my Bitcoin in a qualified custodian, but at the same time benefit from the innovations of Taproot, so that I can put this capital, this Bitcoin, to work, right, as collateral in some sort of economic, as some sort of investment opportunity. Instead of just letting that Bitcoin sit there, can it do something for me? But there's a better way for it to happen. These are some of the things that I'm working on a daily basis.
I'm really excited about that because I think, especially, I'll be honest, like I have a decent amount of Bitcoin and I've been trying to figure out what to do with it. And it's the same thing. It's like I try and send it to a EVM blockchain. I'm like, I don't want to do this wrapped Bitcoin situation. And it's just been challenging, to be honest. So,
yeah. No, I've looked at there's a couple different entities I'm looking at right now where we could, potentially be investors on both sides, deploy and also be invested in the network. And I like to look for opportunities like that because, the intention for our business is to have both a liquid portfolio and an illiquid portfolio, and we're expected to be unique in that way, as far as I know. We'll see who does what.
That was the
down
other
the
thing
road.
that you just told me that surprised me, because as far as I'm aware, most DATs that I've heard of, it's just you buy the asset, you hold the asset, you stake the asset. But you're bringing an entirely new element to this, which is you're actually
Yeah.
investing in the infrastructure and participating, which is really cool. I like that.
Well, that is what we're working on, and it's a lot of work. It's not without risk, right? To be clear, if you just stick your Bitcoin over at Coinbase and post memes, well, that is a business model. It's not the one we're headed towards. But we do think that I think one of the questions earlier is like, what value are you adding? Like, what problem are you trying to solve? And I think about registered investment advisors and their clients, right? They look at this space and say, wait a second, like this is too much choice. It's too confusing. And when you have too much choice, you kind of end up doing nothing, right? And we're trying to be that institutional simplified wrapper that brings everything together and says, okay, you probably want to be long Bitcoin, Ethereum, Solana, and you want to have exposure to these new disruptive companies, right? And for example, Circle went public at 31, and let's see, last I checked, it's still over a double since their IPO, right? And Figure's gone public. That's been a phenomenal success for people that are invested privately. Now
we had Miso, CMO at Provenance, and who works with Figure on last week.
Yeah. Now, I'm a big fan of Figure and Provenance, and I actually, if you can see, there's a hash hat right there.
Hey,
nice.
Yeah.
Shout out to
so there you go. But I think what they're doing is super interesting. But if you think about the registered investment advisor, that client, who is saying, wait a second, my clients are not accredited investors, right? They can't invest in a private equity or VC fund. And so how do I do the best I can for my investors that want to own a company that is investing in this upgrade, right? And the choices are not, there are not a lot of choices. I mean, you've got Coinbase, you've got Circle, you've got Galaxy. I mean, you've got some good choices, but each one is more narrowly focused on their specific business model and not really exposed to the tokens in the same way and not exposed to the privates in the same way. And the way we think about what we're building is that this is that one-stop shop for people that say, okay, I can get my liquid portfolio and my illiquid portfolio over time, hopefully in Reserve One. So that's what we're building towards.
Love that. And then building on top of this, right? Zooming out a little bit, would love to talk about like institutions, and just like I think you have a wealth of experience that most people may not, in terms of like bridging that gap between these worlds. So I guess as you're talking to folks, talking about to potential investors, potential partners, everyone talks about bringing institutions into crypto, but in your opinion, like what's the thing that's holding them back, right? Because I feel like the regulatory certainty is starting to get there. It's not quite there, right? We're still all waiting on the Clarity Act to get passed, but it feels inevitable, even though it's not guaranteed. There's a lot of things coming. Institutions are adopting. So what are the things what are those last blockers that you're still seeing today?
So we have really, yeah, it's a great question. And I think the hard part, I think we have to start at the top, right? We have to recognize that crypto itself is not monolithic. It's not a singular asset, right? So when people say they're adopting crypto, I actually think that crypto is more diverse than people understand. And so what do I mean by that? I think the odd thing is we say crypto, and that can mean Bitcoin, that can mean Ethereum, that can mean Solana, right? But let's just look at those assets and then we'll talk about the institutional question. Okay, so Bitcoin is like gold, right? And Ethereum is like Amazon, right? And nobody has ever put gold and Amazon in the same industry or the same sector. They've never said this category is blah, and it happens to have gold and Amazon. And yet, that's what we do in crypto, right? So I think there is, like, crypto is obviously a disruptive technology, right? And it will likely disrupt many different sectors. But it is in and of itself not actually, from an investor perspective, one industry, right? Bitcoin is kind of basically a commodity. And, there's aspects of Ethereum and Solana that have network effects that are more akin to like the equity value of an Amazon, right? And I think that fundamental difference is amazing, but also problematic when you're trying to just stick something into a portfolio, right? Because think about it, like if you invest in equities, here's what I can tell you. Every single equity has an income statement, cash flow, balance sheet. They have a chairman or a chairperson. They got a chair, they got a CEO, they got a CFO. They've got all those things. It's all very common, right? And then you go and look at blockchains. Some have staking, some don't. Right? Some have like highly concentrated ownership in the singular foundation. Some don't have that at all, right? So like some have an existing living human person that tends to drive the thing. Some like Bitcoin do not, right? So we have like it's very heterogeneous inside of crypto, right? So I think that's the problem. We try to stick the whole thing in there. It actually doesn't make a lot of sense, right? So that's like one problem, right? And then the question is, well, what problem are you trying to solve? Investors don't buy things because they can. They buy them because they have a return and a risk and liquidity profile that meets some sort of problem they're trying to solve, right? So that's where so if you think of it from that perspective, then you realize, okay, like institutional investors will buy this or some piece of this because they think it serves their goals, right? So what have they done already? Well, they invested in VC. That was very obvious. Why? Because it's early stage industry. It's clearly disruptive to many different sets of categories. And VC, generally speaking, is equity. And they know how to own equity, right? They have no idea generally today how to own a token, but they know how to own equity, right? So VC was the first port of call for institutions, right? Now, what's happening more recently is that there's been a move towards store of value. And I think the big news that came up this week or last week was that ADIC, Abu Dhabi Investment Council, for those that haven't heard of it, $350 billion, give or take, pension fund, made an investment in BlackRock's ETF IBIT. It was $500 million, right? And they also went on the record and answered questions by from the press on it, which is highly atypical and very positive. They basically said it was something like digital gold, right? So now that's a big deal, right? Because for those that know institutional investors, venture buckets, meaning like the category that they allocate to venture, is very small, like very, very small. So if an ADIA or an ADIC, these are two big plans in Abu Dhabi, if they put in money into a VC fund, like $25 million would be a lot. But like ADIC runs 350 billion, ADIA is probably $1 trillion, right? These are literally rounding errors in their scale, right? That's not how you get quote unquote adoption. How do you get adoption? It's when someone puts in $500 million, right? And that is what ADIC did do with IBIT more recently. So what was the driver of that? And I think it is this concept of a store of value, right? And now, so let me explain this because I think this is really important.
But one
yeah, go ahead.
thing about the store of value, just something that came up is, people would think it's so volatile when you store, like, it's not like, I think gold is also a store of value, right? But people understand gold, like gold is, physical in a way. Whereas everyone, crypto has bad rep for like volatility and stuff. Is there any, backlash from that perspective for store of value?
Absolutely. Actually, your question, Paulina, is even better than you understand. So let me explain. One of the benefits of being in a venture fund is what? The venture fund is marked quarterly, right? So if Bitcoin does this, but then quarter to quarter, it just kind of moved 10%, that doesn't look that volatile, right? So one of the things that occurred in the last 5 years is that pension funds, sovereign wealth funds that don't like the mark-to-market volatility of Bitcoin were more willing to have that exposure in a venture fund because the venture fund, the private equity funds, mask the true volatility of assets. And that's not just for crypto. That's for all assets, right? The perceived volatility of private equity is low. The reality is it's high because these private equity companies that are owned, they have high leverage. Sometimes they go bankrupt. They are like the Russell 2000 on leverage. So just Russell 2000 is a small cap index in the US. And if you add leverage to it, that would be probably more approximate. But basically, private funds tend to understate volatility. So your question is very good. Look, Bitcoin's volatility has been high for sure. Now it has also been coming down, right, over time. And so the question is where does this end, and what do people do along the path, right? And I think this is a really smart point, Polita, because one of the issues is not what these investors believe at these large institutions; it's what can they get done. And so what we found is that many of these investors own Bitcoin, Ethereum, and Solana in their personal accounts, right? And they were pushing their own institutions to do the same because they believed in it. But it's the restrictions that exist, right? The politics that exist make it harder to do something than what you can do personally, right? And so you're absolutely right. The volatility has been a hindrance. But look, volatility is generally speaking going down over time for Bitcoin. And if people wait for it to have the same volatility as gold, it'll probably be too late.
And it also depends on your time horizon, right? Because, again, I'm always talking to my friends from college who half of them work in finance nowadays. And I'm always kind of crypto pilling them. And I'm just like, listen, you look at the math, and not financial advice, obviously, but if you look at the investment returns over every asset over the past decade, Bitcoin outweighs all of them. So as long as you can stomach some volatility, which goes down over time, it's a pretty easy bet, right? Yeah.
Nothing's easy, I will say.
Fair enough.
But
relatively.
It is true that the Bitcoin has had it's still an emerging asset in most people's perspective, right? So it should have more volatility. So the way you solve for higher volatility is lower dollar exposure, right? So if it's a 30 vol, you own 1 unit. If it's a 10 vol, you own 3 units, right? So, it's very common, for example, in my old seat, when I was speaking to Swiss family offices, right? So they'd say, okay, well, I have 5% in gold. Bitcoin at the time was like, say 5 times more volatile, and it's probably less than that. But they said basically, like, if I own 5% in gold, I should probably own 1% in Bitcoin. That's how they would think about it. And go, yeah, makes sense. And these assets kind of serve the same purpose in concept, right? Store value, but are kind of broadly unassociated with each other. They're uncorrelated with each other. So I don't think it's really even controversial for any of these, family offices that want to maintain buying power over the long period. They buy gold, and now I think they're increasingly buying some Bitcoin because it's just another way to express the same view.
It's all coming. Now, talking about the store of value and gold and everything else, and I kind of want to go back to something we touched on earlier, which is, we talked about Figure, right, and tokenized, and that gets me just my brain thinking about tokenized assets or WAs, tokenization of everything. Curious to hear your point of view on, I don't know, there's so much hype basically around tokenized real world assets. So obviously Figure, they're doing really interesting stuff with the home equity lines of credit. Others are talking about tokenizing actual gold. People are talking about, you can tokenize so many different things. So I guess from your vantage point, like, what's real, what's hype, what's most interesting to you? Yeah.
Look, we're super excited about the potential of tokenization, but you're 100% right that there has been a lot of hype and it has not been successful, right? And I think that's broadly been because the businesses that have been involved in tokenization have gotten the go-to-market wrong, right? They've said, okay, I want the user to have a wallet. I'm going to expect all the users to only come to my little silo, and only I will own all the world of tokenization, which of course is not true, right? And so you end up with a bunch of platforms that are, long on promises, short on delivery, short on users. What I think Figure did really, really well is they said, no, hold on. We're going to use blockchain to make the asset better, and we're not going to foist the complexity on the user up and until they're ready for it or they want to engage with it, right? So they build the HELOCs on the Provenance blockchain, right? And what does that do, right? That enables them to build a product that, in concept, can save significant amounts of money from issuance to securitization, because like HELOCs and a bunch of these like lower dollar credit instruments, what do you have? You have lots of data about the instrument, but lots of instruments, right? So what's the issue there? You have to do, when you package things together, you have to do these audits to say, okay, well, like, are the FICO scores here, and like, are the, a loan to value here, and is the housing, is it insured? All the things that you have to do to make sure the paper is what it's supposed to be, those audits. There's like 3 of these checks can be in the creation of these packages of loans, right? And so that is a use case that is tailor-made for crypto, right? You put all this on the blockchain, this in their case Provenance, right? And you make the asset more efficient, and then you scale up the inefficiencies that you're getting. Think of it this way: if you have $1 billion loan and it's just one loan to Verizon, like, do you need to stick it on a blockchain? Not really. Or you have $1 billion package of literally $100,000 loans, where all those features have to be checked and checked and checked, right? And all that time and cost adds up to higher spread to borrowers, right? So I think what Figure has shown is that, look, there's many ways to leverage blockchain to deliver benefits, right? Bitcoin started as basically delivering self-sovereignty and getting rid of, your asset being a liability, meaning, your checking account is actually just a liability, right, for the bank. Bitcoin delivered self-sovereignty, but what I think blockchains are doing now is they're promising programmability and efficiency, right? And if you look at Figure, you still, like, you have to rely on Figure to issue these loans, and you're hoping that they're a good issuer, right? That they're making, as they issue these loans, their HELOCs, that those are loans that don't default, right? So you do have dependency on them, but they're leveraging the technology to make those assets a better investable asset, which in concept would mean that the borrower would pay a lower rate and the lender would make more money because the process is made more efficient, in part because they use the blockchain. That, I think, is the path forward for tokenization, right? That is what we need to see. And I think it's starting to happen. And I think the model, honestly, is anything that touches high volume, so high volume of low dollar credit instruments is easy territory for blockchains, add a lot of value, right? And from there, then
buy now, pay later, maybe. I don't know.
Well, I was
There
thinking
might be
accounts
something there.
receivable is pretty interesting. So like accounts receivable is interesting because, if you're a vendor that sells stuff to Amazon or Walmart or whomever, like you ship the product and then like you've got this, they owe you money, right? But you might be a small business and not be able, like you really need to kind of get that money sooner. Well, you can take that accounts receivable, right? So Amazon or Walmart, very high credit quality entity, you can take that and say, hey, lend against this thing. Now, there's many large businesses that can just take those accounts receivable and post it to Bank of America, and Bank of America will lend on it. But under a level, there's basically no capital. There's some hedge funds that do it, and that space is ripe for competition from blockchain-enabled entities.
I love it.
Yeah.
Free business ideas from Sebastian over here.
No, it's happening. Now, look, I think the idea that like, we're all gonna like the tokenization at its worst is taking a good enough instrument, let's say like a BlackRock iShare, like their tokenized money market fund, BIDL, right? Okay, so let me back up. At worst, tokenization is double cost, double ledger, right? Because you already have an ETF you can buy for very little in a US exchange. You don't have a lot of risk. You're like, okay, so now if I buy a tokenized version, what do I get? Well, that tokenized version has an SPV somewhere in the Bahamas or gosh knows where, and then you have a token that has a call on that, like that SPV that itself owns an ETF. So you have kind of like two ledgers, right, and two vehicles, and what do you get, right? So this idea that, okay, well now this on-chain representation, right, of an off-chain asset, well, I can take this on-chain thing and go do stuff with it. Well, that's what everyone has said for the longest time. It's not happening. At least not yet, right?
I think Securitize is doing that, right? They're doing so it's rare, but yeah, some people are, but the majority, I agree, it's just on-chain representation of off-chain assets that already exist.
I mean, the hardest thing to do is to make a market, right? That's what these guys all miss. They go, oh yeah, I'm going to do this thing, and they all try to they think that if they can just stick a tokenization wrapper on it, then bing bang boom, there's a market, right? And that has not happened, right? I think Figure's approach of making a better asset for consumption, right, is great. And now, as companies as financial institutions get better at plugging wallets into your financial account, right, it's going to be the case that you're going to end up having more tokenized assets in your portfolio, but you'll have no idea they're tokenized. Like you'll just know that you can buy and sell that thing 24/7. And you don't really know how that happened. And you don't have to worry about the keys and all that sort of stuff. They're going to take the technology and abstract away the complexity and just give you the benefits. I think that's highly likely to happen in the next couple of years. And Figure is one example of that. But there's going to be, I'll give you one more that has happened very recently. I'm very excited about is PayPal. Like we've all heard of PayPal, right? Well, they have a stablecoin called PYUSD, right? I am now a proud owner of PYUSD, and it took me less than a minute. Do you know how I did it? I opened up my Venmo account, which had $60 in it, right? And it said, hey, do you like 4%? I said, absolutely. And it disclosed exactly what it was, but basically I said, I'm interested, click. Then they had moved my balance over to PYUSD. Now, that means I'm in a fully reserved stablecoin that's paying at the time around 4% rewards. And it literally was like 3 clicks inside of a minute. And all of a sudden my Venmo balance is still there. It's still $60, but it's slowly creeping up because I'm getting rewards because actually now it's invested in the stablecoin. And that's the type of innovation where like there's a wallet with my name on it that holds this stablecoin at $60 that PayPal or Venmo and PayPal are taking care of all that brain damage for me. I don't even see it, right? It's just plugged into my financial account. That's what's starting to happen, and that's where the sneaky bull market in crypto comes from, which is like crypto disappears as it takes over, right?
Yeah, I think you mentioned before in some of your podcasts that the next phase for crypto is like sovereign adoption over retail speculation, and that's pretty much it. Or what did you mean by that?
Well, sovereign adoption, I'm thinking more of what happened with Bitcoin for the Emirate, for Abu Dhabi specifically. But it is also the I think along that dimension is the use of stablecoins all over our economy. We think will explode over the next few years, right?
Especially
And
with the Fed continuing to print money, right? The only way to get out of that is we have to increase dollar adoption. Yeah.
well, yeah, it's a broader talk. Look,
Like, don't get me started.
yeah. No, but to Paulina's point, adoption of stablecoin, it means what? You're going to need to use the blockchain, whichever blockchain they're using, more frequently, right? And what do blockchains need? They need people to demand block space, right? You need, and we're not really seeing that with Bitcoin, if we're being honest, right? The transaction volume is very low, right? But we are with stablecoin. It seems like we're truly in front of like a very big thing we've never seen before. Like we're in the process of upgrading money, and that process could be very significant for blockchains that support that use case. And that's just one use case, right? But it's a really important one. I think what people miss is that stocks kind of are okay, and money is terrible. Right? If you think about stocks, you can buy the IVV, iShares S&P 500 for like, I think it's 4 basis points, and the bid-ask spread's maybe a basis point, so it's super, super cheap. Blockchains are not going to make owning stocks cheaper anytime soon, right? But contrast, and by the way, when you invest, like you're supposed to buy something and hold it for 30 years, not 30 seconds, right? So like stocks are, if you think about what you're trying to accomplish with a stock and how our stock market works for the average person, they're like, Robinhood's pretty easy. Right? Compare that to our experience with money. Have you ever missed a Fedwire? Like it's so, and the fact that we even know what Fedwire is, and that if you missed the Fedwire on Friday, you can't send money till Monday. Like
That's crazy.
What I think we have to wake up to on the tokenization's reality is that money is terrible. And that's why it was so ripe for an upgrade towards stablecoin. Stocks are actually okay, right? So then the question is what problem are you solving, right? And that's why I'm focusing more on the lower dollar figure, high volume credit space, because that's where you can compound the inefficiencies to the benefit of borrowers and lenders on the credit side, right? On equity, I think, look, eventually, if everyone has crypto money, stable coins, and we start buying credit, then eventually stocks will go in there too. And we'll probably do what we will see is instead of tokenizing existing stock, we'll start to issue stock on digital rails, which is what Figure just did. They issued a Figure equity on Provenance, right? Where there is no share at DTCC. I'm not going to be able to deposit. Anyways, it's DTCC is like this bank-owned monopoly that basically is the entity that basically tracks who owns what for most securities in the U.S. And Figure issued a security outside of DTCC, but instead of having it be on DTCC, they put it on Provenance. That type of thing, I think, will become more common. It's a big deal, but it's early on that sort of thing.
Yeah. So if you had to round up what was 2025 about, it was probably, I sense, like stablecoins. And I'm curious to know, what are you excited most about, where we are headed in 2026?
I would say 2025 was the end of the beginning. We haven't passed clarity, right? The market structure bill, but we're probably going to get it done soon. We've passed stablecoin. We in the industry, or the SEC has said that they think that Bitcoin is a commodity. They also said Ethereum is a commodity. We're kind of at the end of the beginning, but we're also at the beginning of really ramping the use cases, right? You can't really ramp use cases when you have a whole bunch of uncertainty around the legality of these rails, right?
Yeah.
And we're kind of at the end of the beginning, and that aligns also with, so all this excitement happens. You have lots of leverage. You have some issues in market structure offshore, and we had this blow up on October 10th, right? But I look at that as, a painful, but potentially a painful mid-cycle correction, right? Where we're still in this bull phase. And it's going to look probably different than prior bull markets, right? Because things are evolving pretty substantially, right? The players that are involved are different. The scale of what they're doing is different. The use cases are evolving. This is not DeFi summer. This are not NFTs. We're talking about stablecoins. This is a very different world that we're in, but it still feels like the end of the beginning. And it probably is a period where cycles go longer and they're less volatile, right? Is my guess.
I concur. I think it's institutions, as you talked about, sovereign adoption is happening. Institutions are coming. The legality is getting cleared. So it's exciting. It's an exciting 2026.
I guess I ended this way. A notable investor back in my early days at CSFB said, Sebastian, we don't do business with you because you guys have never shown us something we've never seen before.
Ooh.
Very painful piece of feedback. This guy named John Burbank, he ran Passport Capital, and they're aptly named because they went all over the world with their passports to find returns. And it was a painful moment, but I'll never forget it because I said, you know what, you're right. I'm showing you a bunch of Me Too ideas, and we need to do better. And I always think of that when we think about what's happening in crypto, right?
Yeah.
Yes, there's been cycles before, but we've never seen something like this, right? Where you have an administration and specifically Congress has written the first actual crypto legislation in Genius, which passed. That was for stablecoin, and now Clarity for market structure. We've never seen, reasonable legislation ever written for the industry. So we don't know what the world's going to look like on the other side of that. And to think that we do is obviously probably wrong. And so if we're in front of something that's never happened before, I think we should continue to stay focused and see how it plays out.
Let's keep building.
All right.
Okay, Sebastian, I know you got to run, but one last thing is, I think we're going to skip the typical rapid fire questions. But one question we've asked every guest in the couple of years we've done this is, looking back at the past year or so, what's your biggest professional learning?
I think the last year I've been reminded about like how long it takes for big and good things to happen, right?
Yeah.
I first got into crypto in the end of 2020, early 21, and I thought that the change in everything was right around the corner, right? And it's so hard to be patient, right? It doesn't mean you don't work hard. It doesn't mean you're not on it, but you have to recognize that big things take time, no matter, even if they're obvious, right? And that's, I think I've been reminded of that. And things will take forever, but then all of a sudden they happen so fast, right? We went from nothing happening for so long to everything happening in a very quick period of time. I like to have this phrase, time is not linear in markets. Like you'll have nothing happen for a long period of time and then everything happen in a very short period of time. Like time is not linear in markets.
I love that. Makes a lot of sense.
Keep believing.
Keep believing. We're at the starting line, not the finish line. Okay, Sebastian, want to be respectful of time. Gonna let you run. But this was really fun. Really insightful takes, I think, and really excited to see Reserve One launch, hopefully in Q1. So thanks so much.
Well, it's great to be on. Great to chat with you guys, and keep in touch. I'm sure something will change soon. Okay.
All right. Good stuff. Talk to you soon.
See you guys.
Have a good one. Ciao,
Yeah,
ciao.
Bye-bye.